10 weeks ago, I told you in the comments to wait for the April and May data before making any conclusions about where this market is heading after the Iran conflict. And that data is in. And I'm going to give you my honest picture. I'm going to give you the good, the realistic, and what it actually means for buyers and investors right now. And it's mainly just the numbers. Now, let me quickly set the context for anybody that needs it. At the end of February 2026, the Iran conflict sent shockwaves through the Dubai property market. The DFM real estate index dropped sharply. Transaction volumes in the first half of March, they fell significantly. The buyer sentiment stalled and people started asking whether distressed deals were coming, whether the prices would collapse, and whether the market in Dubai was finished. I said at the time, wait for the data. Don't make decisions based on sentiment. Make them based on facts. So let's look at the facts. In Q1 2026, which is January through to March, the total transaction value was 252 billion dirham. That is a 31% increase year on year. Now that is not a small move. It's 31% in a quarter that included one of the most significant geopolitical events that this region has ever seen. The total transaction volume was 60,303 deals. That is up 6% on the same period in 2025. Now, yeah, of course, March was softer than January and February. The conflict hit late Feb, and the transaction volumes in the first half of March, they were down sharply compared to the prior year. That is a fact, and I'm not going to pretend otherwise, right? But here is a massive critical point. Q1 as the whole still delivered 31% more value than Q1 2025. The market absorbed a genuine shock and still posted a record quarter. Now that tells you something very important about the structural demand which is underneath this market. Now let me show you what the developers were doing during this same period, because in my opinion this is where the story makes a lot more sense. Emaar Properties, one of the largest developers in Dubai, they reported Q1 2026 results. Their sales were $6.1 billion. That is a 16% increase year on year. The net profit before tax was $2 billion. Think about what that means. During a quarter that included an active regional conflict, Dubai's largest developer grew sales by 16%, generated $2 billion in profit. That is not a company operating in a distressed market. That is a company operating in a market which has deep structural demand. And Emaar is not alone. Dubai Islands has led the off-plan sector for 4 consecutive months in 2026, with total sales exceeding 7.9 billion dirham. The off-plan office market hit a record of 3 billion dirham in April alone. That is the highest monthly total ever recorded in that segment. At the ultra prime end, a single apartment in Emaar residences, one apartment sold for 171 million dirhams in the first week of May. A villa at Eden Hills sold for 76 million. The top of this market is not flinching. Now, let me address the question that I know a lot of you have been waiting for. The distressed deals. And I have made a video about this on my channel before about distressed deals during the height of the conflict and the uncertainty that was going around. A lot of people ask me, they ask Charlie, are distressed deals coming? Are there serious discounts available? And there were at that time, but here's my honest answer as of May 2026. The widespread distressed deals that many predicted have not materialized, okay? Gulf News reported on the 4th of May that Dubai real estate market continues to show resilience with little signs of distressed deals that many had expected to emerge after the conflict. That is a direct quote from the market data. Why? Because the sellers who needed to exit quickly have largely already done so. So the window for genuine distressed deals and motivated sellers at a meaningful discount on a quality asset, that was February to March. The window has closed now. The market is stabilizing. Sellers who didn't have to sell, they've pulled back from the market rather than accepting discounts. This does not mean that there are zero opportunities at all. Selective deals, they do still exist. But if you were waiting for a wave of distressed deals to flood the market and come on inventory, the data says that that wave has already came and will not come again. Now, let me give you a balanced view, because not everything is strong, and I always want to be honest on this channel. If you watch my videos, you'll know I always am. The value straight price index recorded a 3.8% contraction in the most recent reading. That is the first negative reading since 2020. It's modest, but it is real. The secondary market apartments, they are facing the most near-term pricing pressure. Listings are rising as sellers who bought at peak prices, they are trying now to test the market at what they can sell for. Buyers have more negotiating room than they had, let's say, 6 months ago, and that's particularly in the mid-market apartment segment. The supply picture for 2026 is significant. More than 50,000 units are expected to hand over in Dubai this year alone. That supply, it concentrated in apartment-heavy communities, will keep a ceiling on how much apartment prices can rise and may push them further in oversupplied areas. So here's my honest summary. Villas and prime residential, they are holding very strongly. They continue to appreciate. Ultra prime is setting new records in Dubai. Off-plan from quality developers, the demand does remain and it is very much real. The mid-market secondary apartments, some has softened. Negotiation is back for that market, and buyers, they definitely have more options. The oversupplied communities, for example, JVC, Arjan, the supply pressure remains real regardless of the conflict. Here is the signal that I found the most compelling for what is coming next. On the 7th of May 2026, which was last week, I'm recording this on the 12th of May 2026, Brookfield Asset Management and Al Shire Group announced a joint venture development in Dubai Hills. Brookfield is one of the largest asset managers in the world with over $1 trillion in assets under management. They have committed capital to a 480,000 square foot project in Dubai during this period of regional uncertainty. When the institutional capital of that caliber moves into a market during a period of uncertainty, my opinion, that is not a coincidence. That is the conviction based on deep due diligence. Brookfield does not make $1 trillion by making impulsive bets. They see something structural in Dubai's fundamentals that outweighs the short-term geopolitical noise. That is the data point that I want to leave you with. While the sentiment was uncertain, the world's most sophisticated institutional investors, they are moving to Dubai. And that is the verdict of the data. 10 weeks after the conflict began, 252 billion dirhams in Q1 transactions. Emaar's up 16% in sales. Dubai Islands at 7.9 billion dirham. Brookfield are committing capital here. The distress wave isn't here anymore. The mid-market apartments, they have softened a little bit and you can negotiate hard on them. And villas and prime, they are holding firm. The market bent a little bit, it did not break. If you want to understand where the best opportunities sit right now, specifically for your budget and your goals, fill out the form in the description below. I will come back to you directly. Let's have a chat. Also, please do like this video and subscribe if it was useful. It really does help me keep growing this channel. And as always, I'll see you on the next one.